His whole goal is to anchor really high and then negotiate down from that. So then the media is like, oh, he's caving. Of course. Of course he would. So I made a bunch of videos talking about the tariffs specifically, but it was like, of course it was anchoring high and coming back down. Of course a deal was always going to be made. And so I think that's what we're starting to see, sort of this whipsaw. But I think there's two main things that I would see that to answer your question. So number one, why are markets going high? But also you're talking about the long-term bonds going up as well.
Yeah.
And what I would say to that is the markets are responding because, of course, of the whipsaw, right? They went down based off of the world was never going to trade with the U.S. again, and now realizing that deals with China are in place to the point that you made with the rare earths, et cetera. So now deals are coming in, and of course, the world goes on, number one. Number two, we're starting to see an end to these wars. That's also good as well. Number three, what the tariffs did do. And so if you look at just the US M2 from the year 2000, we were about 4.6 trillion. Today we're at 22 trillion. All right. Mm-hmm. That's almost a 500% increase. That's about 10% a year. Okay. That is the rate of monetary debasement, or what I would consider the real inflation rate. So that's my hurdle rate. I have to beat 10%. Now, if you understand that, it's not the individual prices going up, it's the rate of monetary debasement, 10%. Then I start to go, well, what asset classes are paying more than 10%? Well, there's been two assets that have beat that. Yeah. One, the NASDAQ. The NASDAQ has been able to beat that. Number two, Bitcoin has been able to beat that. And those are the only two places to look. So Bitcoin and tech, basically. Yeah.
Interesting. Okay, well then when you look at
the wallets that are holding Bitcoins that haven't moved in a certain time frame. So we look at all the Bitcoin that have not moved in the last 1 to 5 years. We call these HODL waves, people that are holding Bitcoin for long periods of time. And people that have been holding it between 1 and 5 years are now starting to take long-term profit. So over the last 3 months, we've seen about 240,000 Bitcoin be moved from long-term wallets into the market. 240. So it's been matching, the amount of selling has been matching the inflows from the ETFs and the treasury companies. So that's sort of what's been keeping the price right here. But here's what sort of history tells us, that there's potentially a supply squeeze coming. Because what we can see, again, looking at on-chain data, is we can see the amount of selling coming from these wallets is diminishing pretty quickly right now, based on and beyond the Fed. All right. We have to look, because we're in a global market, specifically when we're looking at like something like Bitcoin, which is a global asset, it's a commodity. And so while maybe the Fed is still sort of somewhat holding on what they're doing, even though we've just seen them change the banking SLR ratio, maybe that's a form of sort of easing, for example. But at the same time, we've seen China doing massive money injections. Okay. And so we have to understand that when China inflates their monetary supply, it also comes into global assets like Bitcoin and increases that. So while the US has sort of been sticking a little bit, we can see other banks easing at the same time, which is why, again, I'm saying that most of the developed world, Australia, Canada, Europe, et cetera, we can see that long bond making new all-time highs. So what is that?
I want to kind of dig into a deeper fact on the institutional adoption and kind of what it really looks like, because MicroStrategy, who you're talking about, I mean, we just mentioned, has added over that $1 billion this week, pushing its total holdings to about 226,000 BTC. But it's also now facing 5 lawsuits, security fraud lawsuits from law firms, accusing it of misleading investors during Q1's Bitcoin buying spree. Now, the company racked up nearly $6 billion in unrealized losses last quarter after buying near 95,000. And the suit claims strategy overstated profitability and underplayed the risk, but Bitcoin has obviously since rebounded and the legal cloud is still a little real here. But I guess the bigger question is, how does this kind of legal overhang reshape the risk reward for, corporate treasuries and boards, considering it
requires all types of disclosures? And so I would imagine, this might alert other companies as to what the potential risks are. We'll probably see, to your point, better disclosures and things like that. But yeah, I can't really speak to this lawsuit. I don't believe it's going to slow down this movement at all, because really this movement is much bigger than what most people think it is. And let me just kind of break this down for you for a second. What a lot of people think is going on is maybe a bubble where we have all these companies coming in and doing these leveraged Bitcoin plays. How many could the market bear? What's really going on? Or is there really any value being created? And what MicroStrategy has done is they have their stock ticker MSTR, obviously, and that is their product to the market right now. A lever it ends up with is asset prices at all-time highs. Homes are unaffordable anymore, right? How do our kids afford homes these days? How do they afford buying into stocks, into companies that are now trading like Tesla, 150 times PE, right? And so these assets are now unaffordable for these next generations because of that monetary debasement. And so I think what could happen, I think we're already starting to see this, is Bitcoin, as I said, acting as this liquidity sponge. So because it is the best performing asset, it's absorbing more of this liquidity than any other asset is. And it's sucking the monetary premium out of real estate, out of companies, out of stocks, et cetera. So for example, consider Bitcoin as assets when they consider your home loan. I mean, it is changing very rapidly.
Let's follow up on that. I mean, I was going to ask you about how it kind of crowds out. If this is the case, does that crowd out traditional safe havens like golds or treasury, like the T-bills we were talking about? But I guess I could also kind of position it as like if a sitting president is linking Bitcoin to dollar relief, I mean, does that legitimize it as a sovereign hedge or risk politicizing Bitcoin and kind of undermining its neutrality? You know what I mean?
I don't think it undermines its neutrality at all. And I don't necessarily think that it undermines it either. And so, I think certainly we're starting to see sovereigns starting to allocate towards Bitcoin, but we're decades from where that really starts to become a bigger number. But, you talk about gold all the time. So this is the environment that Bitcoin has grown in spite of the attacks of the government. Elizabeth Warren literally ran on a campaign called anti-crypto. Okay. So Bitcoin has done that in spite of that, but now the headwinds have moved in 180-degree difference to now tailwinds, right? Now we have Trump talking about, I built the Bitcoin industry, I buy Bitcoin, right? And so what does that do? So when you ask about risks, what happens in these 50-year cycles where we see these technological revolutions that we're in right now? There's 4 distinct phases. And phase 1 is the eruption phase. So the technology was just invented and we have these early adopters playing with it. And that's the sort of the environment we've been in. Phase 2 is where the technology has sort of been a scramble. Each of these sovereign wealth funds are starting to scramble, but these things take quarters. They take years to come to fruition. And so it's happening. It's happening quickly. And over the next, 6-12 months, we're really going to start to see that pick up.
It almost feels like the president has some better advisors around him too when it comes to the crypto side. I mean, he's not just launching Trump meme coins right now, right? It feels like this is kind of monumental and it's progressing quite rapidly within his White House.
Yeah, well, you have to look at, Secretary of Commerce Howard Lutnick, and Howard Lutnick is head of Cantor Fitzgerald. And Cantor Fitzgerald, before even the administration started, had announced a $2 billion credit line that they were going to give to lending. But we need to look at, instead of the rear view mirror, we need to look at the windshield. Where are we going here? And so when we look at the asset price, there's several ways that we can start to sort of understand where it's going. One of which is looking at what is it competing against. So let's say Airbnb competed against hotels and Uber competed against taxis. This is like a venture capital lens, if you will. And Bitcoin is competing against store of value assets, where you park your wealth. Right now, again, that's bonds, 300 trillion. That's equities. That's real estate, 350 trillion. That's gold. That's collectibles. That's fine art, things like that. We have about a quadrillion, 1,000 trillion is sitting in just those store of value assets. And that's where Bitcoin's competing. The question is, what percentage of that basket could it really? 21 was repealed. Okay, that started to give the banks the now ability to get into Bitcoin. On top of that, I think was what you were saying, is now the Fed has actually come out as well and given them notice that they are able to start getting into that right now. And so I would imagine over the next 6 to 12 months, we're going to see the major commercial banks, JP Morgan, Citi, Wells Fargo, et cetera, starting to potentially offer Bitcoin right inside your account, as well as offering lending facilities against that Bitcoin as well. And that's another massive catalyst. Talk about a headwind to a tailwind.
Yeah, no kidding. Okay, before I let you go, I got to ask you about, we talked about the Fed, and we know that the data doesn't really play within this asset, at least too much. But if inflation ticks up and the Fed delays rate cuts into Q4, say, does Bitcoin kind of break that 120, or do we kind of...
So for example, in Q4 of last year, asset prices were making new all-time highs, but global liquidity was actually trending down. So then in Q1 of this year, asset prices went down, even though global liquidity was going back up again. And then in Q2 of this year, asset prices started going back up again. Currently, global liquidity is still trending higher. Right now, it's slowing down a little bit, but it's still sustaining a high level. That's what I'm watching as the main indicator to see sort of when this bull market starts running out of steam.
All right, well said. Mark, I know I got you for 2 more minutes, man. I mean, let's just do a quick little round, one-line answers. What's the biggest
Yeah.
opportunity? You think it's Bitcoin on corporate or and sovereign balance sheets? Which one?
The biggest opportunity to make big gains.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.